On this week's Emily Now episode, we're going to help your business blast off by talking about term loans, unsecured, secured, what you should know, and we think you're going to learn a lot, so stay tuned. My name is Dylan Gallagher, founder of EmilyNow.ca. Each week we put together these episodes in an attempt to help you do more. We believe that if we can answer your questions about financing, that you're going to be in a position to make better decisions that help you do more, and that those decisions would lead to you saving money for the future, investing in new opportunities, or maybe giving back to the community around you. So we hope you enjoy this week's Emily Now episode. You can find us on Twitter at Emily Now Canada. You can like us on Facebook, subscribe to us on YouTube. Be more than happy to interact with you in any of those social channels, and would encourage you to send us your questions. Maybe your question might be featured on a future Emily Now episode. And so let's get started with this week's first question, which is, what will be better for my business, a secured or unsecured loan? And I think it's helpful maybe to define secured versus unsecured first. An unsecured loan means that the bank is going to give you some money without asking for any specific security or collateral. Whereas a secured loan means that you're going to be pledging something or giving the bank something that they can go after if you stop paying them and they need to recover their money. Unsecured loans can also be referred to as non-recourse loans, and they're very, very hard to get. Many borrowers assume that unsecured loans are better for their business because their rationale is, well, if things don't really work out with my business, not really on the hook, the bank can go and try to go after my business, but good luck. The truth is, though, is that when you ask for an unsecured loan, you're signaling to the bank the level of confidence you have in what you're doing. Banks need to know that you're committed to giving them back their money and paying them interest. And so by you giving them security or giving them collateral, you're demonstrating your level of commitment. So if you're looking for an unsecured loan, you don't want to give any collateral, that tells the bank a little bit about your intentions and how much confidence you have that you're going to be able to deliver what you said you could deliver. And so some banks will, though, consider giving you a non-recourse loan if you have significant net worth or the business that's borrowing the money has really solid financial footings. They don't have a lot of debt. If there was a search done, they would see that there are no general security agreements or corporate guarantees outstanding. And so a bank will, on occasion, do a non-recourse loan, but not very frequently. They are very difficult to get. Logically, unsecured money is going to be more expensive than secured money. And when we talk about unsecured money in the context of helping users at EmilyNow.ca, we find that unsecured money usually refers to a line of credit or a credit card. And that's kind of how you can think about it. But to keep in mind, banks are generally apprehensive about providing unsecured loans to businesses. And so is a secured loan or an unsecured loan better for your business? Well, based on this answer, hopefully now you've got a sense of direction on what that means. Moving on to our second question, can term loans help my business get going faster? The short answer is no. If you're looking to get your business going, debt is very, very hard to find, very hard to get, unless you're going to be leveraging your home or some other assets that you have. The better decision would be, if you think you need capital for your business and you need to get it going, that you could figure out what grant programs are available in the marketplace for you. These are government programs or subsidies that are available to give your business the money that it needs so that it can get going. Many businesses, before they start, don't figure out how they're going to fund themselves. Usually an entrepreneur will say, I have an idea, then they'll get going, and then they'll try to figure out all the cash flow problems afterwards, or they'll try to solve their cash flow problems afterwards. And it's not related to startup businesses. Many existing businesses don't know how they're going to fund themselves year to year, month to month. They just sort of say, well, we'll just continue to sell more products or offer more services or get more customers. But rarely with small or medium-sized businesses is there actually a conversation about how are we going to fund ourselves. But the answer to can term loans help my business get going faster, the answer is no, but customers and sales are how you get going. So the most important part of a business is not how much money it can borrow, but rather how many products or services are generating revenue from real customers out in the marketplace. Term loans, however, can be used to facilitate your growth. So for example, let's say you've got a bunch of orders outstanding that you've delivered on and you're just waiting for customers to pay you. Well, maybe then a bank could give you some financing to help you float your cash flow while you're waiting for those receivables to come on. Or maybe you need to buy a piece of equipment that will help you produce more of the product that it is you produce, in which case a term loan might make sense for you to consider so that you can acquire that piece of equipment to ultimately do more. So applying for credit with a bank is a good way to start, a business credit card as an example. But what many businesses fail to think about, or maybe have just never been told or have never thought about, is that banks don't just have blank checks waiting around to give it out to every business that they meet. They need to understand the specific reason your business needs money, and then they'll try to find a program or a product within their portfolio that can match it. So for example, if you need working capital, then you're applying for a working capital loan. If you need to buy a piece of equipment, then you're applying for an equipment loan. If you need to take out a partner who is purchasing, who you're going to purchase the shares from them, you would then need a term loan. But you can't just walk into the bank, say, give me money, our business is really great, when can we get the check? You really have to do a great job at articulating to them, what do you need the money for? How do you intend on using it? More importantly, how do you intend on paying it back? And so term loans cannot get your business going faster, but once you get going, then term loans can be a good way to help your business grow. If you'd like to see what that might look like for your business, I'd encourage you to visit emilynow.ca and see what might be involved. A common term loan request that we get is usually when a business wants to buy out another partner in a business, or an individual wishes to purchase a business from somebody else. A term loan solution is great for cases like this, and we recently had an example of an individual who was purchasing a business and they needed some capital to help close the deal, as it were. And so the bank had agreed to give them a third of the purchase price. The purchaser, or our client, had a third of the purchase price in cash, and then had negotiated a deal with the seller of the business that he would defer getting the last third of the purchase price until after the bank had been paid. And so the interest rate was just over 4%. It was amortized over 5 years, so that means the new buyer of the business had 5 years to pay the bank back, and then could begin making good on the rest of the payment owed to the seller. Business is healthy, great margins. It looks like the client could probably pay the bank back in 3 years, 2.5 years maybe, given the margins of the business. And then the current owner, who will now just simply be an investor, they can get their money a little quicker too. So that's a common example of how a term loan gets used. And banks generally don't want to pay for the whole purchase price of a business, as was the case here. But the bank was comfortable enough with the interest rate and what they were prepared to offer that they gave a third of the purchase price. The individual buying the business put up a third in cash, and then the individual who was selling the business agreed to take a third of the money after the bank had been paid. And so there's an example of how you might want to consider a term loan for your situation. And if you want to see what that looks like, visit emilynow.ca, punch in some numbers, and see what it means for you. Ryan Weaver wrote an article in the Globe and Mail, and it was an article about some of the challenges that businesses face, and that owners had listed access to financing as one of their biggest concerns facing the future of their business. And in our experience, I'd have to say we agree. We see that many businesses are good businesses, but because of how the banks operate, they're not really able to get the money that they need. And in fact, it's one of the things that causes us the greatest amount of frustration in certainly my 18 years of doing this, but more importantly through emilynow.ca. We see requests come in, we'll score them properly, we'll help get them in front of the right bank, but man, it can be difficult trying to get those banks to issue term sheets or commitment letters. Some of the classic examples we see, of course, are that There are businesses in markets that the banks just don't like. Hospitality might be one of them, or transportation might be another. But these businesses are good businesses, and so because the banks won't help them, these businesses end up going and getting, say, mid-market financing or private financing at higher interest rates, and then they go back to the bank to say, look, we've been paying these higher interest rates for a couple of years. Can you give us a loan so we can at least begin saving interest? I mean, if we've been able to afford higher interest rates, certainly we can afford yours. But the banks don't look at it. Generally speaking, banks don't tend to look at it that way. They really just get stuck on, is that a market that we want? Is that the kind of client that we want? Maybe we don't like the ratios that we're seeing, and so they find a way to either delay giving an approval on the deal, or they just find a way to not do it. And there seems to kind of just be this cycle where these good businesses come through, and if they could just get access to really good financing, they certainly could grow, employ more people, help the economy, etc. But that's still kind of hard. And so when we read this article, we had to agree with Ryan that that certainly is something that we see on our side. And I think the reasons for it are because common sense, it's hard to computerize or systematize or build a software program for common sense. I mean, can you imagine if we could do that? But not only is it hard to computerize common sense and put it into some sort of credit matrix, but the personalities and the dedication of the owners are also something that doesn't translate into a financial worksheet very well. And over 18 years, I'm familiar with dozens and dozens of entrepreneurs that have survived some economic turbulence. They've survived losing big customers and replacing them with new ones. But unfortunately, the lending world doesn't have a way to put that in a box somewhere. And so anyway, we hope in some little way that we are helping to change that with emilynow.ca, our online platform. But we agree with Ryan that, yeah, it's pretty tough to get financing, and we can see why businesses continue to list access to financing as one of their biggest concerns about going forward. So on that note, if you are a business owner and you're concerned about financing, you want to maybe get ahead of an impeding problem that you see, or get yourself out of a problem that you're currently in, or take advantage of some new opportunity that requires capital, I'd encourage you to visit emilynow.ca, stick in the loan amount or the financing amount that you think you need. You kind of go through the rest of the tools, and in less than 5 minutes, you should be able to see what your options are, and we'd love to help you get approved. So get started today, and we'll see you on next week's Emily Now episode.